Stop scrolling. What if I told you that big tax refund you're celebrating isn't a win, but often a sign you've made a financial mistake? I know, it sounds counterintuitive. We're conditioned to celebrate a big refund like it's found money. But that refund means you've essentially given the government an interest-free loan with your money all year long. Money that could have been in your pocket, earning interest for you, or helping you hit your financial goals faster. Today, we're busting common tax season myths so you can reclaim your money, reduce your stress, and truly win with your finances, not just break even. Let's dive into some common beliefs that might be costing you. Myth number 1, you only need to think about taxes in April. This is perhaps the biggest, most costly myth. Thinking tax prep is a mad dash in March and April is a recipe for missed opportunities and unnecessary stress. Many scramble last minute, digging through old emails and shoeboxes, often forgetting crucial items. But what if I told you that shifting your mindset could save you hundreds, even thousands of dollars? The truth is, effective tax preparation is a year-round activity. It starts with good record keeping. Imagine if you just created a dedicated digital folder, or even a physical one, where you stash any tax-related document the moment it arrives. W-2s, 1099s, receipts for deductible expenses, donation confirmations, health savings account contributions. If you do this throughout the year, when tax season rolls around, you won't be in a panic. You'll have everything neatly organized and ready to go. My personal anecdote here is that early in my career, I was definitely a last-minute scrambler. One year, I almost missed a significant deduction for work-related education expenses because the receipt was buried deep in an old email folder. It took me hours to find it, causing a ton of unnecessary anxiety. Now I have a Taxes 2024 folder on my desktop, and every time I get something relevant, it goes straight in there. It's a game changer. This year-round approach also allows you to strategize, adjust your withholding, max out IRA or 401k contributions, make a big charitable donation. These are decisions best made before December 31st, not on April 14th. Planning ahead optimizes your financial picture, making you proactive, not reactive. Myth number 2, doing your own taxes is always cheaper and better. Many of us feel empowered by online tax software, and for simple returns, it can be a great, cost-effective option. However, believing it's always the best choice can be a costly mistake, especially as your financial life becomes more complex. If you own a home, have investments, freelance income, or significant deductions, a qualified tax professional can often save you more money than they cost. They're experts in the ever-changing tax code, spotting deductions and credits that you might overlook. Did you know there are over 70,000 pages in the U.S. tax code? It's literally impossible for the average person to keep up. For example, a professional might identify a specific business expense deduction for your side hustle that you didn't even know existed, or help you navigate capital gains implications from stock sales. A significant percentage of filers, some studies suggest as high as 20 to 30%, miss out on deductions and credits they're eligible for, simply because they don't know about them. A professional can help you avoid costly errors too. The IRS can impose penalties for underpayment or incorrect information. While software can flag some obvious mistakes, it doesn't offer the personalized advice and strategic planning a human expert provides. Sometimes paying a little for peace of mind and maximize savings is absolutely worth it. And speaking of savings, this next myth is one of the most common ways people unknowingly leave money on the table. Myth number 3, a big tax refund is like winning the lottery. We briefly touched on this, but let's truly break it down. Getting a refund, often around $3,000 for many Americans, feels good in the moment. It's a nice lump sum, but what it really means is you've been overpaying your taxes all year. The government held on to your money interest-free. Imagine if you had that extra $250, $3,000 divided by 12 months in your paycheck every month. What could you do with it? You could invest it, put it towards an emergency fund, pay down high-interest debt, or contribute more to your retirement. Let's say you invested that $250 each month for just 5 years, earning a modest 7% annual return. You'd have nearly $18,000, almost $3,000 of which would be pure earnings. If you waited for the lump sum refund each year and then invested it, you'd miss out on a year's worth of compounding interest. That's a huge difference. A refund means you've missed an opportunity to put your money to work for you. The goal should be to break even, to have your withholding as close to your actual tax liability as possible. You want to keep your money working for you, not for the government. Now, this next myth is a dangerous one because it relies on a mistaken belief about how the IRS operates. Myth number 4. The IRS will tell me if I missed a deduction or credit. This one is a firm no. The IRS is there to ensure you pay the taxes you owe, not to act as your personal financial advisor. While they might flag discrepancies that suggest you underpaid or filed incorrect information, they are not going to send you a letter saying, "Hey, we noticed you forgot to claim that child care credit you're eligible for." It is 100% your responsibility to claim every deduction and credit you qualify for. They process billions of returns, and their system flags things that don't match up with information from employers or banks, like your W-2 or 1099 forms. They're not looking for ways to give you money back. This is why being proactive and understanding what you might be eligible for, or working with a professional, is so important. The truth revealed. Be proactive, not reactive. The truth? Tax season doesn't have to be a source of dread. By busting these myths, we see that effective tax preparation is about smart, year-round planning, meticulous record-keeping, and strategic decision-making. It's knowing when to DIY and when to call the pros. It's optimizing your cash flow rather than giving the government an interest-free loan. Most importantly, it's about taking ownership of your financial literacy to confidently claim every dollar you're entitled to. This video is for educational purposes only and does not constitute financial advice. Always consult a qualified financial advisor or tax professional before making significant financial decisions. Your actionable takeaway today. Here's one simple thing you can do right now to make next tax season easier. Create a dedicated digital folder on your computer or a physical folder in your home for Taxes 2024, or whatever the current tax year is. As soon as you receive any document that looks remotely tax-related, a bank statement with interest earned, a receipt for a large medical expense, a confirmation of a charitable donation, that W-2 from your employer, drop it straight into that folder. Get into the habit. By the time next January rolls around, you won't be scrambling. You'll have a beautifully organized collection of everything you need, saving you time, stress, and potentially hundreds or thousands of dollars. If you found this video helpful, please give it a thumbs up and subscribe to the channel for more friendly financial mentorship. What's your biggest tax season myth or challenge? Let me know in the comments below. And remember, your money deserves to work for you. See you next time.